Welcome to another episode of Boom and Bust. I'm your host, Tony Clement, here at the News Forum where all voices matter. Our next guest is warning against wishing for significantly lower house prices. Be careful what you wish for, he says. To find out why, let's welcome Steve Lafleur. He's a senior public policy analyst who writes for The Hub, a discussion platform. Welcome to the program, Steve.
Thank you for having me.
I guess the first obvious question is, before we get to your argument, what is the state of housing supply and demand in Canada presently?
So, for a long time, there's been a major issue, in particular in Vancouver, or the Lower Mainland, rather, in the GTA, where there has been low vacancy rates, particularly in the core cities, and uh, climbing housing prices. So that's been a long time coming. But then the pandemic came along and it really scrambled a lot. You had a bit of a land rush for more real estate because the reality is, for instance, if you've got a couple that both work at home, working out of a one bedroom apartment, that might not work so well. So it might be time to find a two-bedroom apartment. And you had a lot of people who seemed to pull forward a lot of life decisions. For instance, somebody who might have decided that 2 or 3 years from now was the time to move out to the suburbs. If you have a young family, for instance, all of a sudden it was right now. So we accelerated a lot of trends, and it really potentially, at least in the short term, might have added some fuel to the fire. But the reality is that we've had this structural shortage for a while. This is just chickens coming home to roost.
Yeah, that's interesting. So from your perspective, these trends were already there. There was some acceleration because of life choices during COVID, but there was already a mismatch between supply and demand in your estimation?
Yeah, so it was pretty routine to have rental vacancy rates below 1% in Vancouver and Toronto, for instance. Um, when you've got that kind of market, the reality is that you're having situations where, so for instance, I lived in Vancouver in 2016 for a brief stint, and I was looking for a 6 month lease, not a year lease. I didn't want to, I didn't want to have to deal with subletting to somebody else, and I was showing up to showings, and there would be 12 people who showed up, and
Right.
at that point, it's you're not in a healthy rental market because somebody is going to ultimately end up paying more than asking, and that's just you magnify that in the purchase market, where it's even where there is a bit of a speculative element sometimes.
Right, right, right. So, why do you say in your article that I did read that the Bank of Canada should not crush housing prices?
Well, so um, I I have no position on what the Bank of Canada is doing. I understand the role that they've got. It's a difficult situation. My challenge is there are people who are kind of wishing for this.
Right. Okay.
There are people you see who have some glee in their eyes when they see the rates going up, financial conditions tightening, and thinking, now's going to be my time. When I really don't think that it's going to work out if it gets to that point the way that they think it's going to.
So, what I guess my question would be then, why do you feel that way? What's the downside?
So the challenge is that if you were to tell me, for instance, that a single attached house in Vancouver was $500,000 next year, think about what that means about the likely state of the economy. Unless somehow there was some miraculous infusion of new housing supply, the reality is that that's a situation where the market is deeply depressed. What does that mean for non owners? It probably means that there's high unemployment. It probably means wage growth is low. Um, Opportunities are low. If you're somebody who's been, sitting on maybe a bit of money, hoping that one day you'd be able to get in the market, well, you better hope that that money's parked in something really unconventional, because probably the case that all financial assets are in trouble as well. So then you think about it. You've got less income, you've got less wealth, prices are lower, also interest rates are higher. Are you in a really materially better situation? Probably not.
And is that a situation kind of nationwide or in those hot markets that you're referring to?
Well, this would be a case, if the economy, if housing prices collapse in the GTA and the Lower Mainland, we would almost certainly be in a pretty bad economic situation across the country. The reality is that these two regions are a huge contributor to the economy. You can't just take all that out of the market and hope that everything will be good. It probably won't. Um, so that'll have knock-on effects for other markets.
Right.
It just seems naive to me that you're going to have this massive short-term, that you can have this massive short-term correction in prices and not have downstream effects.